Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down. Market is up about 0.1% there. On the S&P Nasdaq 0.2% negative along the semiconductor Dow 0.1. Russell 2000 transport, banks, energy, biotech, healthcare, home builders, utilities, retail, emerging market, every single sectors are seemingly slightly green today. Bitcoin down, gold, silver miners are up, dollar down, oil up, treasury bond up, the rates are down. VIX is up a little bit today. Let's stick with S&P 500 ETF. Spider! 65-minute chart here. So this is what we closed on Friday. Looks like we opened slightly lower here this morning, as you can see, and then market trying to make a move here. Long upper wick let us know that there is an attempt to reclaim the micro-term moving average. I was not able to get there and reclaim it and get above it. As you can see on the second hour, definitely the selling pressure came about. However, the short-term moving average has been pretty much supporting the buyers in the last several sessions. You can see, I mean, pretty much guarding that 411 vicinity. On the third hour, though, the lower wick let us know that bears trying to push it down like they've been trying in the last late last week here. You see a lot of lower wicks here, as you can see. A lot of bears, optimistic bears, are looking for lower prices, but bulls been very adamant about that, making sure the price stays above the short-term moving average. Once it did, you can see the 4th hour, 5th hour, 6th hour. We do have a shaved top on the 6th hour candle there, and we did get above, slightly above the micro-term. As you can see, we did close above the micro-term. That's going to be important to going into tomorrow, because we do have a shaved top, we close on a strong note here. If we can see a follow-through, strong follow-through, there's a great chance bulls are going after to fill this down gap. Perfect. As you can see, that down gap was open last week here. I talked about the fact that as long as this down gap remains, things will be troublesome for the buyers. Bulls need to get up and fill this gap as quickly as possible. As you can see, next day, bulls got up here, not able to fill it. And then ever since then, things got very, very choppy here. But it looks like bulls might be trying one more time. But it's important that we do see a strength in the first 2 hours and stay above the micro term. Obviously, sellers didn't want to hear any of that. They actually got really, you know what I'm saying, offended. A lot of times when the down gap, when the shave top is have that shave top, it's sort of 50-50. I mean, because we're still below the, you know what I'm saying, we're still right on the micro-term moving average. This down gap still remaining. Again, we may see a down gap.
What? Bro, what are you talking about, man?
And that would really pretty much kill this micro-term momentum that bulls found in the last several hours. So I think the down gap will be the best case scenario for the sellers. If it gaps up and fade, that's not good. So you don't want to look forward to like gapping or fading, because what happens if it let's say gaps up and then it starts to fade? What's going to happen is it's going to use that micro term as a new support, and it'll fade, and we may see like some sort of red candle for the first hour, and then it may bounce back up, you see. So gap up and fade is not going to favor the sellers, but gap down will, to kind of kill the momentum that what we've witnessed in the last several hours. So check out that oscillator.
10 minutes later.
So another bad news here for the sellers. It looks like the oscillator, right? Oscillator is now breaking out It seems as though above this, what it appears to be, we've been talking about this triple bearish divergence. Let's say this thing goes up and then it like curls back down, right? A lot of times, what market can possibly do is kind of create like the wider version of the divergence. That's a possibility. So really, this is not gonna be, you know what I mean? This does not mean that bears have completely failed. There's still a chance that bears can make something out of it. However, again, tomorrow will be the key, how this market plays out tomorrow morning. If we see a continuation to the upside first thing in the morning, you will see this oscillator pretty much skyrocketing to the upside, and all of this will be nullified. And that's one, you know what I'm saying, one aspect of the scenario that bears been afraid of. Is there some bears probably going to look at this and say, there might be some kind of a head and shoulder formation. You might be in that camp here. You got the left shoulder, you got the head and the right shoulder. So bears are going to probably argue that we're building that right shoulder. I mean, as of today, it's tough to say. Again, it will be important what happens tomorrow. So what do you guys think? Are you guys thinking that we're going to nullify this head and shoulder formation, or nullify this divergence signal, and this thing is ready to get up here, or get up here and feel this down gap, or are the bears building this head and shoulder formation, and we're in the process of building that right shoulder before our tankage? Leave in the comments and let me know what you guys think. It's a very, very important juncture for both bulls and bears. If that down gap doesn't get filled, still bears can be really make things extremely hectic. However, if bulls fill this down gap, you may want to consider that overall trend could continue to the upside and come back for you. We'll reassess the situation. Enjoy your evening of trading tomorrow.